General Electric reporting first quarter results later this hour. Analysts are expecting GE to report earnings of 11 cents a share adjusted. That's on revenue of $27.45 billion in revenue. Honeywell, Schlumberger, and Waste Management also among the companies reporting their first quarter before the open. Joining us right now, the Wall Street Journal's global economics editor, John Hilsenrath. And John, good to see you. Good morning to you. First, your expectations for GE. The company is not what it was, a shell of the larger company that it was at one point. Why is this important in your view, and what are your expectations?
Well, I mean, to your first question, why is this important? I would say it's not. GE used to be a bellwether for not only the U.S. economy, but for the global economy. It had businesses all over the world. And, you know, in terms of the U.S., it was in consumer finance, it was in housing, it was in the industrial economy. We'd looked to GE in the past to see how the U.S. was doing. We don't have to look at it now because GE is a hot mess. It's really, it only matters if you're invested in GE stock. You know, they're divesting from businesses. We could hear more about their dividends and whether they're going to cut dividends again. It's a restructuring story now. It's no longer a U.S. economy story.
Yeah, it's interesting. Maybe you look at Amazon to check the economy these days, right?
Yeah.
All right, targeting tax cuts. Meanwhile, John, House Minority Leader Nancy Pelosi launching a new line of attack against the historic Republican tax cuts. Watch this.
The tax scam adds, again, over $2 trillion to the deficit. While the Republicans were saying, oh, it'll pay for itself, we know that it doesn't. Anyone who says that these tax cuts pay for themselves it's not true. It's nonsense, and it's BS.
So now it's BS, John. It comes after the top Democrat called the $1,000 tax cut bonuses crumbs. We remember that.
Yeah. Well, so
in terms of the bonus that corporate America received versus the crumbs that they are giving to workers to kind of put the schmooze on is so pathetic. It's so pathetic.
John, I want to get your take on that in a second. But Dagan, here we go again with the name calling about the tax cuts that's actually had a real impact.
They need to create a new emoji just for facial reactions to Nancy Pelosi and the garbage that she says. You know what? Revenue in this country wasn't growing because the economy wasn't growing. We know from the CBO, that's how you get revenue up. We know from the CBO this year, 3.3% growth is expected. That's from the CBO, which likely is underplaying that and underestimating the growth. You throw in the estimates for next year, fastest growth since 2005. In 2017, revenue in this country was up 1%. 1%. In a growing economy, revenue should be growing 3 to 5%. We saw 5% growth in, say, the 80s, after the tax reform from Reagan, in the 90s. It's pathetic that she's spewing these lies and nobody calls her on it.
Yeah, that's the BS, these lies that she's coming out with. Because, John, we know that the reason that they lowered taxes on the corporate sector is so that the corporate sector unleashes animal spirits so that corporates start spending again. For the last 8 years, before President Trump, they were sitting on capital, and now all of a sudden we're seeing them loosen the purse strings, and we see capital spending moving again, and that's going to lead to job creation.
I think we're going into an election season. We have midterms coming up. This tax cut is going to be an object of a lot of debate in these elections. We're going to get spin on both sides, frankly. I think we have to look at the costs and benefits of the tax plan. On the benefits side, as you say, there was a major overhaul of the corporate tax code. The U.S. Taxes at 35% on corporate profits was uncompetitive globally, and they got that down. There was a cost to it. You know, the CBO isn't estimating that the tax cuts pay for themselves. I don't know of estimates that do say they pay for themselves. We are, looking at trillion-dollar budget deficits in the next couple of years. So I think when you talk about the tax cuts, you've got to look at both sides of it. There are benefits. We have a more competitive corporate tax code, but there are real costs, and you can't ignore them, and that's that we have bigger budget deficits.
Here's the messaging, though. Here's the messaging, Gary B. It's our money. It's not their money. Yeah.
That's it. The underlying tone has become. It used to be that the government said, look, just give us enough money to pay for infrastructure defense. Now the underlying tone is we will decide how much of your money you keep. We are the judge and the jury and the oracle. And that's just that's why government is going in the wrong direction.
That's been the case for the last 8 years.
But Republicans, again, they have not sold this tax cut the way they have to sell it. I mean, the general public is still saying, largely, we're undecided about whether we like this thing. So we can complain about Nancy Pelosi's rhetoric here, but I don't think Republicans have done anything close to what they need to do to convince the American people that this is good for them. I mean, the polling numbers just don't show it.
Yeah.
Well, I think they'll find out how good it is for them when they start to file their taxes for next year and they start to see more money in their
The Republicans need them to figure it out sooner than that, or else this thing might be in jeopardy.
That's true.
I think a lot is also going to really depend on how the economy does over the next couple of years. It looks like we're going to have a good year in 2018. Is that going to be sustained in 2019 and 2020?
That's the thing. There's a growing chorus. Yeah, there's a growing chorus, John, that things really, there's a growing chorus that things really slow down in 19. Even Robert Kaplan from the Dallas Fed told us yesterday that he's expecting 2.6% growth in 2018. But, John, he thinks it goes down to 1.75% by 2020. That's a big drop.
That's what the CBO is saying, too, 1.9 in the long run. And so the judgment that the public makes on these tax cuts is going to depend on how we do. We'll know over the next couple of years. We can't, it's the first quarter. We can't, the first quarter of a four-quarter football game, we can't make a decision based just on 2019.
It's true, but don't you think we know a lot at this point, Dagan? I mean, we know that the economy has moved out of the 1 to 1.5% range. We know that we're now in the 3% range.
Well, and
we also know that thousands of companies have given out $1,000 bonuses. We know that too.
And if you don't,
we know a lot.
If you don't figure that out by midterm 2018, what happens? That you don't have a long term with these tax cuts. The other side is they're gone. So you better figure it out quickly.
Yeah, I dare those Democrats to try and take away the tax cuts. When they passed them, they were bitching and moaning and complaining that they weren't permanent. But now they're worried about the debt. Where were they worrying about the mushrooming debt during the 8 years of the Obama administration? It's comical. They need to be called out on the hypocrisy of their messaging more than anything.
I will leave it there. John, good to see you, sir. Have a good
Great
Friday.
To be here. Thank you.
All right, John Hilsenrath there.